please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. SGX Nifty is indicating that we'll have a bit of a gap down. 10,327 is where it is. And yesterday, of course, we closed at the low point. Ashwani Gujral, Mitessh Thakkar and Prakash Gaba now join us. Good morning, gentlemen. Ashwani, you advised to, to take shots yesterday when we were closing. With a 35-point gap down, would you want to cover them, or do you think we could most likely lower from here?
Good morning. See, it does not seem like we are going to break down and have a big trend day on the downside. In fact, overall market texture seems to be that after a 100-point rally, the market tends to sell off. After a 100-point decline, the buying is back. So that way, what you have to do is not get trapped by chasing, which means that now the next support is around 10,300. Since we are already going to gap down 35, 36 points, I would much rather wait for this 10,300 and maybe 24, 550, 600 where we bounce back day before to get my intraday long trade rather than to chase on the downside, sitting on a decline that came in yesterday and then get trapped at support levels. So the way I'm taking this is that let the early morning sell-off be complete, and once we start finding support around the 10,290, 300 type of zone, there you buy, and probably you'll get back into that 10,350, 450 range, because the market does not seem like it wants to break down or break out. It just wants to chop around everybody and create losses for everyone.
That's well said. Okay, well, let's get Mitessh Thakkar as well in. Good morning, Mitessh. What's your Nifty trade today?
Yeah, good morning, Lata. So I think, we will possibly break the intraday pivot of 10,350, which has been holding out for the last 2-3 sessions. Once we do that, I think, as Ashwani highlighted, the next support is closer to about 10,300 to about 10,280 zone. Since we are opening over there, maybe shorting immediately is not advisable. But what will happen is that the 10,350 level should now act as a supply pivot. So I think in case we get intraday bounce back closer to about 10,350 again, I think that will be a good chance to go short and then look for 10,280 as your first target. And if we start breaking below that, then possibly we may restart the decline, which could retest the 200 average. Typically, the average can be tested a couple of times. So this could be another chance. So that's the way you'll approach it. You'll also keep a watch on the Bank Nifty because it's showing two pivots of 24,500 and 25,000. So in case the Bank Nifty starts tricking below 24,500, I think that will convince me to be a more aggressive short on the Nifty as well.
Okay, so 10,350 is just 10 points away from where we are currently. You're going to go short once that level gets breached. So I guess, okay, shorting is the way to go. Prakash Gaba is also here with us. Prakash, hi, morning. Is that your view too, that you make more money shorting this market in the very near term?
Yeah, good morning, Sonia. Yes, certainly it looks like you short and you make money because the market falls faster than like it goes up. But I have a feeling that 300 seems to be a strong support zone, 10,300. If it goes there, we're likely to find some strong support in the area. But on the upside, I think 10,375 is a stiff resistance as well. So it depends where we open. So if we open with a gap down, it's difficult to sell. Maybe we'll let it settle and then take it long. But upside seems to be capped to around 10,375. When I look at the Bank Nifty, I feel that its broader range is around 25,000 on the upside and a strong support in the vicinity of 24,500. Best to be playing stock specific.
Okay, best to be playing stock specific. So let's discuss those stocks then. Ashwani, you go first.
See, mid-cap tech did fairly well today, so yesterday. So Mindtree is a buy with a stop of 838, target of 860. The one consistent place where new highs and a bull market is on is mid-cap IT. So that is where you will make money even during this choppy type of phase. MCX seems to have bottomed, possibly for a trading rally. That's a buy with a stop of 820, target of 845. Shriram Transport is a buy with a stop of 1440, target of 1500. I think this is a play on CV, etc., because CV stocks are making new highs. And Balrampur Chini continues its downtrend. That's a sell with a stop of 90, target of 82. And JSW Steel is a sell with a stop of 300, target of 285.
Okay, what about you, Mitessh? What would you be looking to buy or sell this morning?
So, given that I have a slightly bearish bias, I have 3 sells to 2 buys. Eicher Motors, the indicator setup is turning quite positive, so that's a buy with a stop at 28,300. Look for targets close to about 29,500. Exide had a good price and volume breakout yesterday. That's a buy with a stop at 213. Look for targets of 226. And 3 sell calls. Marico, the intraday charts are negative, so sell with a stop at 306. Look for declines to about 290 levels. A very similar setup is happening on the chart of Reliance Industries. That's a sell with a very tight stop at 922.5. Look for declines to about 885. And Escorts is, I think the medium-term chart, short-term chart is turning quite negative, so I would still be taking a sell call here as well. Keeping a stop at 860. Look for declines to about levels of 820.
Okay. Prakash, what would you trade?
I'll have 3 buys in one shot. Berger Paints looks good. Has seen a good up move, good base formation out here. We can see a climb to around 256 plus zones. Stop below 248 should be fine. Cummins India is also looking good to me. A good rally from the lows. Possible target on the upside is 815. Stop below 780. United Spirits looks like a Friday dig happening out here. Good base formation here. Possible target on the upside 3,300. Stop below 3150. But the sell is Motherson Sumi. Looks like a tired formation out here, more of an exhaustion pattern here. We could see a slide to around 308 zones, stop about 318.
Okay. Well, gentlemen, thanks a lot for that.
I just wanted to ask, Ashwani, is there any specific trade that you have on a specific private sector bank? Yesterday, the last hour saw sudden selling in many of them.
See, ICICI Bank seems to be in some sort of trouble because every day that tends to find selling. I think the market is clearly differentiating between retail and corporate banks. The corporate banks and PSU banks are getting hit much harder than IndusInd or HDFC, etc. So the bank nifty, that is the reason, is not able to make large moves because half of it is pulling it up and the other half is pulling it down. So the corporate facing banks could be in for more downside.
Yeah, but we know that the trouble, I'm just speaking fundamentally, the trouble that corporate-facing banks will face. Those numbers are calculated ever since the February 12th circular came. So is there a good support level for these banks? Say ICICI, Yes, SBI.
See, so far they are making new lows, and till they keep on making new lows, it's tough to say what is the support. And also, there is, what the RBI governor said, if you read the whole speech, that's not very comforting. So every day new frauds are coming out, NCLT is slow, etc. So somewhere, the believers are kind of letting these banks go, and that money is moving into IT. So that basic thesis remains that financials are getting derated and IT is getting, overweight. So chances are these banks will continue to move lower as people leave banking.
Okay, we'll come back and talk about stocks, but for now it's also been the week about IPOs. You heard it from Bandhan Bank, and the latest on the block now, state-owned defense company Hindustan Aeronautics will open its IPO today. The price band is between 1215 and 1240 rupees. Let's find out how this one looks. Anisha joins in with more details. Anisha, how are the financials of this one?
Well, the financials are not very strong, but remember it's a defense company and it is a slow play. But talking about the IPO first up, now this is the second defense company in the week itself after Bharat Dynamics, which is coming out with the IPO. The government is looking to offload around 10.2% stake in the company and looking to raise around 4,200 odd crores, giving it an implied market cap of 42,000 odd crores. Now, the company is the largest defense player when it comes to the production value, and it makes certain components as well as the entire aircraft, helicopters, aerospace structures, etc. You asked about the financial performance. Well, the revenue has grown at a CAGR of just 4% over the last 4-5 years. The profit has actually declined by 5% on a CAGR basis over the last 5 years. That is partly because of the reduction in other income. Remember, this is a negative working capital cycle business. So as and when you execute the business, you deploy that money, causing a reduction in your other income. And that's the reason we are seeing that profit decline. Now, the company has been a lot dependent on one of its products, which is Sukhoi Su. Almost 44% of the company's sales were coming on that account. They are moving from product mix to more towards service revenue. Now, their contributions around around 67:33. They are, focusing a lot more on the service business. The order book is rather strong at 69,000 odd crores, giving it a visibility of the next 3-4 years. It is cash rich, around 12,000 odd crores is what the cash balance is. There is no debt on the company's book. They have a very strong record when it comes to dividend giving. It's a dividend, it is a government company. In terms of the valuation, well, if you look at the FY17 picture, it looks all right at just 17 times. First half of FY18 has not been that great. Remember, defense is a very choppy business. Second half is when we see a lot of execution coming into the picture. So right now, it looks a bit expensive at 52 times, but the management has been confident, saying that they can grow at 6% CAGR on the top line. So not a very 20% number on the top line if you look at the growth expectations. However, the two triggers for the company, light combat aircraft and light combat helicopters, if they get these two orders, we can see sizable opportunity for the company. Back to you.
Okay, Anisha, thanks a lot for that.
Times. That looks expensive.
Oh yes, that does look expensive. Anyway, let's also discuss the other important component of the market, commodity market. That's a bit soft this morning. Manisha now joins in for a quick roundup. Manisha, good morning.
Morning, Anuj. Thank you so much for that. Well, yes, the crude oil prices are headed on a weaker note. They are closing this week as well, slightly negative, 1.5% down for this week already. And we have been reacting to the US weekly inventory numbers, the kind of import tariffs that we have seen coming in from US and development on that story. The latest one, of course, is from IEA, where they say that the global oil demand is expected to pick at a fast pace, but they expect the supplies to pick up at a faster pace. So that really nullifies the whole thing. So while we did see some gains overnight, the crude oil prices have not been able to hold on to them, and there is some profit taking happening in the Asian markets right now. For the metals as a sector, it is trading quite mixed. If you look at the Shanghai steel and the iron ore prices, they are down between 0.5% to 0.7% on the lower side. The US import tariffs, more commodities being added, more countries being spoken to right now. It's something that's not auguring so well for the metals as a space. And also there has been some increase in immediate supplies of some of these metals in the warehouses. That's pulling the prices down. Especially for aluminum, we have seen prices decline. They are trading at a 14-month low in Shanghai, 3-month low in LME, as the winter output curves in China are about to end, and that means you will see increase in supplies. That's pulling the prices down. The only one positive factor in the metal space to watch out is that as the spring begins from the next week, you will see the construction industry gear up, and that is where the demand could be coming in from. Any case, the second quarter of a calendar year is when you see the maximum demand for metals, as the construction is at its peak in most of the countries. So that is where you could see some support continuing for many of these metals.
Okay, Manisha, thanks a lot for that. That's the commodity view. Time for some self-reflection, perhaps. I just said some bad news is priced in. Here's Samir Arora saying that nothing is priced in the market.
We have seen for 5 years people trying to price in that that Reliance is coming into telecom and therefore it is priced in, and therefore after 5 years there will be only three telecom companies left, therefore it is priced in. For 20 years I would have been telling you that HDFC Bank is a great company and still not priced in. We just agreed. Nothing is priced in. What is pricing in means? Because every day a new thing happens. We have just agreed that the RBI governor is saying it's not over, that I'm going to give you a bigger danda than you've seen. We have separately the government saying that for every 50 crore NPA, please tell me whether it is a fraud or not. Now look at the bank. The bank, on what basis will he say it's not a fraud? Then you will catch the banker after a few days if you find a fraud by mistake or by chance, or maybe another bank for the same NPA says it's a fraud, or not a fraud but a possibility of a fraud. First of all, what is a fraud also we don't know. If somebody has overly projected his numbers, not because of any malicious intent, but just because he was a bit more optimistic, and you find that he underperformed, so is that a fraud or not a fraud? We don't know. So these things, why in the middle of this, to prove something that we are analysts and we have worked hard for our living, why can't we live life more peacefully and make higher amounts of money? Buy your private sector banks and enjoy life. Let this be sorted out, and then somebody will buy it and we will pat him on the back and say, good show.
Yeah, I remember Samir, you always said that, this irritates you when you say that this is priced in. You said nothing is priced in. Okay, so in your fund right now, Samir,
nothing is priced in.
Yeah.
Ever.
Where are you right now in terms of long short? And we have seen what, a 10% correction from the top now. Do you see another 4 to 5%?
I don't know about 4 to 5%, but generally we are a bit low now. At one point, we were about 40% net. Our average long term is 60. But that happened because of budget, and it was done we don't normally short the index. But on the budget day, there was no time. So we shorted the index in a sort of a reasonable way. And now we've covered some things here and there. So now our net will be something like 47, 48 or something. But we'll go back to the normal 60, but there is no dying rush. If I feel left out of anything, I will cover. But otherwise, I am not going to preempt. Because what will happen on the day when it goes up 2%, you can analyze what has happened to the world and, react. There is no urgency either way. But we are still buying a little bit here and there. Even today we bought. And we are shorting also a little bit here and there. But I'm just not moving the 48 up so easily, but just because it's there, let it be. It's sort of not paining me either way.
But Samir, again, coming back to the question, you normally don't evade this question in terms of, is there more correction for this market? For example, can this be a 15 to 20% correction? We've had in the past bull markets where markets have corrected 15 to 20%.
Well, it could be, by the way. I no longer, after 2008, say that we are God's gift to mankind, because we are not. And in general, this idea, as I said, I also always, I don't evade this question, but I also don't evade the question that we don't know. We are not arrogant enough to know, because, these things like this trade war or whatever, if you read anything, you will realize that the 1929, basically the whole world crisis or crash came because of trade wars. So the trade war word is very bad. Now, yesterday or a day before, because I am so confused in so many meetings, that, the US guys say, that is, Trump says that we will now have tariffs on $65 billion of more goods from China, basically in telecom and some electronics or something. Now, I don't know what the Chinese will do, and back and forth, there will be this mess. And in itself, we may not have bothered not realizing what it means. But because the biggest crash ever happened because of trade war related reasons, you can't get excited today, you can play it out. We are not out, we are not fully in. If it goes up 5%, we will relatively underperform by 2%, doesn't matter. All I feel is that today, neither way there is too much urgency.
Well, the SGX Nifty has been indicating a slightly red start. It's a mixed picture in Asia as well. We'll have to keep that on board, and the fact that we ended at the lowest point yesterday, lowest point of trade yesterday. Just keep that on board. A little bit of green on Shanghai. That's the relief. But let's put some F&O cues on the table. Chandan Taparia of Motilal Oswal Securities joins us now. Good morning, Chandan. So what are you trading today?
Yeah, good morning. First, talking about the index, expecting the range-bound move with limited upside. And if sustains below 10,330, then selling pressure could be seen towards 10,276, 10,200. Talking about the stock-wise, positive view on most of the IT counter. We have seen the good run in most of these stocks, including Mindtree, Hexaware, KPIT. Here I am recommending to go long on Tata Elxsi. The stock has formed a small triangle pattern on the daily chart. It has been respecting to its immediate support trend line, surpass immediate hurdle, and the trading above its supply trend line. So expecting a positive move into the counter, one can buy with a stop loss of 1020 and expecting this stock to move towards 1088. Second trade is from the private bank. We have seen surge in the bank nifty, but private bank are likely to be outperformer, and I have selected to go long on HDFC Bank. This is a stable counter. Recently it has taken support near to 1835, that is a horizontal support trend line. Longs are intake with put writing activity. Some stability is visible in the counter, so recommending to go long with a stop loss of 1860 and expecting it to rally towards 1925. Third idea is that is on the negative side. I am suggesting to go short or either take the put in Tata Steel. The stock is making lower top, lower bottom formation. In the recent bounce back move, it failed to surpass immediate hurdle of 635. So there are potential to again retest 600 in the lower zone. So one can buy 600 put, keep the stop loss of 5 and expecting this put to move towards 17 rupees.
Okay, Chandan, thanks a lot for joining us. You have a good weekend. Let's move on and get a fundamental view as well. Ganesh Ram Jayaraman of Spark Capital Advisors joins us now to talk about the markets and, of course, the hot topic, right? The banks and the scams that we've seen so far. Ganesh Ram, good morning. Thanks so much for joining us.
Morning.
You've been tracking the banking sector for very long. What have you made of the recent scams that we've seen, and at what point would you advise a buy, if at all, in any of the PSU banks?
I think we are looking at these scams as possibly a one-off event. They're not going to, influence our longer-term investment decision. But the broader point is the asset quality cycle, has it come to an end? How do you see the rate environment? How do you see the impact of these on growth, on margins, and asset quality going forward? Impact of bond yields, the pressure of them on treasury losses. credit costs they're going to remain high. PSU banks will continue to see a capital challenge, and dilution below book value is a live risk there. So some of these will appear value on paper, but it's a bit like a mirage. Go closer, you realize that the dilution is going to happen below book value, and as a result, the stocks are not as cheap as they appear on paper today. So any PSU bank which is trading below book value, we will stay away still, though they are value. We think they are value traps. Private banks, definitely yes, not all of them, selectively. Our preference is changing more and more away from the wholesale liability financials. Not just banks, not just NBFCs, definitely they are, even some banks. So the wholesale liability franchises are the ones we are trying to stay away from. So it's CASA, retail liability, and the safe haven asset quality banks where we are really positive still on.
I take your point entirely that we are making too much of a fraud which is genuinely one-off, and 13,000 crore in entire banking sector balance sheet of 110 lakh crore, we should get the perspective right. But, the noise about NPA, now we know the full number. I mean, anything that is stressed and standard has already become NPA. And those banks, like for instance ICICI or Axis, are excellent liability franchises. Correct. If you say you're moving away from wholesale, then is there at some point, ICICI at 300 or whatever, Yes Bank at 300, at some point don't they become a buy? The private banks, because they also will be able to get the public sector banks abdicating space. True.
We are still underweight on banking or financial services in general. Okay. Within private banks, we'll be more like overweight within the retail liability franchises. Okay. But yeah, some banks a lot more preferred than others in the same space. Okay. I can't basically draw all the entire private banks with one brush.
Okay. Ganesh, good morning. Looking at your strategy report, you're talking about emerging all-weather managements, and two names which stand out for me, Ashok Leyland and Bharat Forge. Your thoughts on what's going so spectacularly right for a stock like Ashok Leyland and even Bharat Forge, which has also been doing quite well?
See, the way we are trying to build a portfolio today is try to buy stocks with two things in mind. One is managements who have a track record of performing irrespective of cycle. A 10-year track record which tells that these managements have historically done well irrespective of commodity cycle, rate cycle, exchange cycle. And then the second bucket is managements who have reduced their cyclicality a fair bit of late, increased the proportion of in their business mix, their past vulnerabilities. Some of the names clearly fit into that bucket. If you look at the rear view mirror, you might say that they have been past vulnerabilities show up, but we believe they have improved a lot on those historical challenges.
Okay, the other space that you are bullish on, I guess, is the capex cycle recovery, because of course names like Ashok Leyland and Bharat Forge feature, but there are other names as well. There's Voltas, there's Thermax, and we were speaking to some of these managements. They indicated that they haven't seen this kind of a pickup in terms of activity in a very, very long time. Is there still a lot more value here?
I guess private sector capex is inevitable at some stage. We don't see clear signs of visibility of that right away. I don't see that to happen in FY19. We don't see that. But Middle East can surprise us. With the way oil is shaping up, Middle East can show some signs of pickup. The first signs of capex recovery in the Western world is already showing up. So clearly we are trying to pick stocks which are not just oriented towards domestic capex recovery, but also overall the rest of the world.
Okay, this is news coming in that Edelweiss announces binding arrangement for acquisition of Religear's securities business. That binding arrangement ends on March 15th.
No, this is about the acquisition. This is only the binding arrangement.
Just announcing
they're just announcing the binding arrangement that ends on the 15th of March. So this is in continuation of their disclosure that dated December 20th about the acquisition of Religear.
It's just that they're finishing the process. Okay, sorry. Ganesh, just to come back to finance, which part of the NBFC business would you stay in at all?
1 second. Lata, I just want to read this out just to clarify. We hereby inform you that due to the seller's inability to obtain the requisite clearances, so the deal has actually fallen through. Religare failed to obtain requisite clearances in a given timeline. The binding arrangement has now come to an end. So it's not that they've cleared it, it's actually come to an end, it's fallen through the acquisition.
Yes, you know, I guess today what would happen, of course, Religare could fall, but Edelweiss could rally, because a lot of people thought, you know, why were they getting into Religare's business? And, you know, that is going to be a problem with some of these companies, you know, on the face of it, some assets look good, right? But you don't know when you do the proper due diligence and when you try to see the books inside, you just don't know, and that, of course, is going to be a problem.
Yeah, actually, my question was also a bit triggered by the Edelweiss news. You know, stocks like Edelweiss, Motilal, IIFL saw a lot of buying because they were very good wealth managers, and that perhaps will not die away. So in that NBFC space, you know, what would you like? I only see Aditya Birla, oh no, that's Aditya Birla Fashion. I don't see any NBFCs.
Mahindra Finance is one stock that we've liked. Rural financing is something that you know, we still think has a recovery likelihood going forward. That's a space where the tractor financing or even various other rural is something that I think government will like to put money back into people's pocket, and growth or improvement in asset quality cycle is something that we see possibly playing out there. And those segments, pricing power is a little level. It's not the cutthroat like home loan segments which you see in that segment. So that's one pocket. Again, we need to be a little more watchful, you know, in general on NBFCs.
Okay, I think let's just also simplify on the tickers. Just simply say that basically the deal has fallen through. Yeah. Because, you know, don't understand sometimes when this one line goes that the binding agreement has ended on 15th March. Simple thing, by 15th March, because Religare failed to obtain...
Edelweiss is not going to acquire Religare's securities. That is the bottom line. And that will mean Religare's pain continues, and maybe some kind of bit of a relief in Edelweiss. We will see in 5 minutes when the markets open. So we'll do just that. No, sorry.
I just wanted to toss that question to Ganesh Ram, because you know you track a lot of these NBFCs, and Edelweiss has given a huge returns over the last, say, 1 to 2 years. With this deal falling through, any thoughts that you'll have?
No, we don't track the specific stock, and I'm not exactly on top of it.
All right.